Good morning, Bitcoiners. Hello, and welcome back to another edition of your Bitcoin Economic Calendar. I'm Mauricio Di Bartolomeo, co-founder of Ledn, and as with every Tuesday morning, we bring you the news and analysis you need for the week ahead in Bitcoin. It's been a very volatile week for Bitcoin and equity markets in general, and this week ahead should be no different. So we got lots to cover in this week's issue. To start, we're going to talk about Monday's price action. So yesterday's price action, which was a bloody Monday in a lot of markets, but Bitcoin and others managed to stage a turnaround. We're going to discuss some of the indicators and market signals that we saw yesterday and what we could draw from those. Second, we have the Federal Reserve's FOMC meeting that starts today and ends tomorrow. We're going to get into what we could expect from that meeting and how markets could react based on the potential updates provided by the Fed. And last but certainly not least, we're going to talk about stablecoins and the role that they play during a crypto market downturn. That might give us some clues as to what we could expect to see from stablecoins in the year ahead. So, lots to cover today. Grab your coffees. It's going to be a great one. So starting as we usually do with Bitcoin, we see that yesterday, for the most part, was a bloody day for markets, with Bitcoin and others reaching a fresh new low for the year before turning things around and managing to close the day into the green. So just as a recap, Bitcoin yesterday dropped below $33,000 and managed to essentially close the day at 36,700. So pretty impressive in terms of the range of prices that we saw yesterday. And if we look at the price action for Bitcoin in general, just outside of yesterday, we see that over the last essentially 7 weeks, we've seen Bitcoin drop around 35%. And this is, this is what we can see from when we essentially run the chart from the peak in those 50 days to the bottom of those 50 days. So it's ranged, essentially dropped from a high of around 52,000 to a low of around essentially below 33,000. So as we see, that represents 35% drop. And this has left many wondering how much lower we can go. While nobody has a crystal ball, including ourselves, we can try to find clues from some market indicators. And as Bitcoin has often taught us, no trend lasts forever, and the current downtrend should be no different. So first up, we must recognize that all markets are down. If we look at the S&P 500, if we look at Bitcoin, if we look at DeFi, most of these asset prices have been getting hurt, even the Dow Jones. And that just basically tells us that no single asset lives in isolation. When market conditions change suddenly, markets get to be or tend to get correlated. And that's why you start seeing some of the prices move in tandem despite the assets being very different. And a good example of this is the Bitcoin's 1 month price correlation with the S&P 500. We touched on this last week, but it's actually gotten even more correlated over the last 7 days. So we just wanted to show that here. And we're just going to pop the 1 month correlation and ignore the 1 year for now. But as you can see here, the 1 month correlation between the S&P 500 and Bitcoin is at record levels. The only time that it has been higher in its history was back in the rally that we saw in July, where everything was rallying. But again, here we see that the 1 month correlation between Bitcoin and the S&P 500 is actually at near its highest levels ever, close to 70%. This is also the case for the NASDAQ. This chart here, which was shared by Will Clemente throughout last week, shows that Bitcoin's correlation to the NASDAQ also reached an all-time high, which is, again, case in point. When market conditions change, a lot of these assets tend to get correlated. So in the next section, we're going to look at historical drawdowns on traditional equity markets and how that could impact Bitcoin in the future. But suffice to say that the S&P 500 could drop another 10% from where it currently stands if things got really bad. Now, looking at other Bitcoin indicators or other Bitcoin market indicators, there are some interesting signals amongst all of the red or all of the volatility that we saw yesterday. One of those signals is the fact that the open interest in Bitcoin futures, which again we touched on in our last issue, has dropped quite significantly. So as we can see here, last week we were sitting at a total of around 15 billion, whereas right now we're sitting at a total of around 13 billion, 13.5 billion. Now, what we can see, $13 billion worth of open interest is still relatively high compared to, say, the $10 billion open interest that we had back in July. But what's interesting here is that over the last week, we have wiped $2 billion worth of futures open interest, which is pretty significant, and it's a sign of heading in the right direction. But we still have a little bit of excess here if we compare this relative to, say, the $10 billion range where we were middle of the year or starting of the year. So this means that there could be still some volatility that could be introduced to markets from the amount of open interest in the futures market. Again, going back to the amount of leverage that we see in these types of markets. The second one is, even though we saw a massive turnaround yesterday in terms of price, if we go back to the daily chart, we see that even at by yesterday's standards of volume, the move was better than it has been recently, but we still see that it pales in comparison to the volumes that we were trading a year ago, essentially, when we were at this similar price levels. Look at the volumes here; they're 2 to 3 times what we are seeing being traded today. Again, just for context, we saw much higher volumes traded in May and even January of last year. And we could interpret this in a couple of ways. For one, most of the selling pressure seems to be coming from smaller investors and potentially the derivatives markets. And the flip side of that argument, of course, is that we have not seen larger investors step in and essentially absorb some of the selling pressure by putting in sizable bids at particular levels. So while relatively small, spot volumes have been starting to grow, which is a good sign over the last few days. And this could be seen as a sign that larger investors could be starting to step in opportunistically to put in these bids at these levels and hold the price. For clues as to where institutions might be willing to step in next, we could look at an interesting psychological indicator, and this could be MicroStrategy's average purchase price for Bitcoin. And that average current purchase price stands at 29,861. And that is right where this blue line here is on the graph that you can see right here. That's the MicroStrategy support. If pressure continues to mount on equity markets, and this could be introduced by the Fed and other type of external factors, we could see Bitcoin try to test these levels. And as you can see, these levels actually lined up quite nicely with the previous support levels that Bitcoin had reached. So there's more than one thing converging around this 29,800 mark. So it's an important level to keep our eyes on. Now, looking at other market indicators, we see here that if we look at the short interest for Bitcoin, short interest has continued to build, but it has not even surpassed the highs of short interest that we saw in November. And that is interesting, because that means that while investors are clearly looking to hedge by setting up some of these short positions, they're not piling on to these short positions as they were doing in the middle of summer or even in earlier 2021, which is interesting to see that the short interest is nowhere near where it has been in the past, even though we are at similar levels. And the other thing we wanted to show was that there was a very interesting candle printed on the Bitstamp exchange yesterday. And this is the candle that we're zooming in here. This large candle here that you see has a wick that essentially drives price all the way to 38,000. This candle came as Bitcoin was approaching the lows of the session. And as you can see here, this was right after it reached essentially the very low of the session. And what we see here is that there was a knee-jerk market buy transaction that elevated Bitcoin price to 38,200 for a few minutes in this exchange. This candle, the structure of this candle, the shape of it, has all of the makings of a short covering rally that turned into a brief short squeeze. And what that means is there was likely somebody that was holding a short position on Bitcoin. They saw the price reach levels where they would be happy taking profits. They put in a big market order to rebuy the Bitcoin they had shorted, and the price shot up. Other people that were short, when they see the price start to knee jerk, they start covering their positions out of fear, and it creates this momentary short squeeze that we discussed in the previous episode. So the last two charts, essentially the one that shows that short interest has not continued to grow, and the one that shows that there are this graph here that shows that potentially a large short position was looking to cover at these levels. Those could be clues that short investors could be happy taking profits at these levels, and they do not seem to be doubling down on further downside. So that is an interesting insight. And then looking at the options flow for Monday, so for yesterday, and we'll take a look at what the options flow is saying right now. Second, let's just pop the options flow here on skew. So in the options flow this morning, actually on yesterday morning, we saw the options flow was still a little bit defensive. We were seeing more puts being bought than sold, more calls being sold than bought. And we actually see a similar flow this morning. We still see more puts being bought than sold. So these are the downside protection contracts. More of them are being bought than sold. And these are the upside participation contracts. More of them are being sold than bought. So again, options flow for both yesterday and today continues to show defensive positioning on the portfolio. So these options flow, it shows that investors are leaning towards protecting against further downside. So these macro forces that investors are protecting themselves from potentially could be the unknowns or the uncertainty that could be introduced into the markets by the Fed. So again, markets staged a very impressive turnaround on Monday. Let's go back to the daily and just show the daily chart here. We see the daily chart for Bitcoin is a very impressive turnaround. And however, impressive as this turnaround might be, it might still be a bit too early to say that we are fully out of the woods. We're seeing the S&P down 2% this morning, NASDAQ down 3% this morning. So there could be still pressure coming from traditional markets. While the Fed's current plans look to be priced in terms of tapering and rate hikes, any surprise or any change on these plans by the Fed could cause a continuation of the risk-off trend. As we've covered in the past, even if the fundamentals look great, when investors go into risk-off mode, the correlation between asset prices rises and most risk assets come under pressure. So more on this in our next section where we'll be covering the Fed and what we can expect there. Moving over to our analysis of the S&P 500, we see that U.S. equity markets have come under tremendous pressure over the last 2 weeks as markets continue to digest the Fed's new posture. We're just going to pop up the weekly chart here. As we can see, it's been 2 brutal weeks so far for the S&P 500, and we have dropped more than 14%. Actually 12%. We've dropped 12% over the last 28 days, which is quite impressive. To put it in perspective, the total market capitalization of the S&P 500 companies represented over $40 trillion by the end of 2021. The recent 12% drop in the S&P 500 represents about $4 trillion in value destroyed. Bitcoin's market capitalization is under $1 trillion. So just to put things in perspective, more than the equivalent of 4 Bitcoins worth of value have been destroyed in the last 4 weeks in downturns from the S&P 500. To put it in further perspective, the Coronavirus Relief Act passed in March 2020 was for a total of $2.2 trillion. We've already destroyed almost more than twice that value in the drop of value of the S&P 500. So just some food for thought in terms of the magnitude of some of these price moves and the impact that they can have on the economy. Now, the markets with these moves seem to be trying to send a message to the Fed as it goes into today's FOMC meeting to discuss how aggressive they should be when raising rates. And this is the headline that we wanted to share, courtesy of CNBC, stating that markets are expected to remain on edge as the Fed meets this week. Today, the meeting starts. Now, the Fed has already mentioned that they are prepared to raise rates 3 times throughout 2022. And they are predicting to start doing so in March, their next FOMC meeting. If everything goes according to plan, the Fed should be almost done unwinding its bond purchase program and getting ready to raise rates in their next meeting. What could spook investors further is one of the following. One, if they have accelerated their plans to taper, if they have tapered ahead of schedule, essentially, and they are now moving faster than people initially anticipated, that could spook the markets. And this is all stuff that could come out as part of their press conference tomorrow. So this is why we're trying to get ahead of some of these things that might be announced or might change and how markets could react and based on what they're already kind of pricing in. If the Fed, another thing that could spook the markets is if the Fed announces that they will be essentially switching gears from tapering their bond purchase program to essentially actively trying to reduce the size of their balance sheet. So this means going from purchasing bonds in the open market and unwinding those purchases to then basically going full tilt and starting to sell bonds in the open market to get them to the prices where they want them to be. They could do this in an effort to elevate rates higher and faster. That could spook markets. And the third thing that could spook markets, and there's many others, but these are the main ones, is if the Fed points or signals to the fact that they want to accelerate the speed of the rate hikes. So if they want to raise them faster earlier in the year, or if they want to increase the number of rate hikes. So if they go from 3 to potentially 4 or 5 rate hikes in the year. Now, in addition to the Fed, there are a plethora of earnings this week, which include the likes of Apple, Microsoft, and Tesla. But those will all take those will all take a backstage to what the Fed has to say. To highlight how much of second stage these earnings are taking this time around, more than 74% of the S&P 500 companies that have reported results so far have topped Wall Street analysts' expectations. That's according to FactSet. And you are still seeing the S&P trading aggressively lower this week. So the status quo will likely be for equity markets to remain under pressure until the Fed turns the tide. An optimistic scenario for markets could be that the markets have already priced in the current plans that the Fed has, the known plans that the Fed has, and barring any changes, unless the Fed gets even more aggressive, markets could see some relief from here. Some of these clues in terms of potentially reaching a tipping point, we can see in something like, for example, we thought this was really interesting, the ARK Invest Innovation Fund. It had a record volume traded yesterday. Very, very strong volume traded so far in today's session. And if we look at how disfavored this fund has been, we've seen that it's dropped actually, now 69% from its highs earlier in the year. But as we can see here, we're seeing a surge in volume. And as we can see from the chart, these surges in volume, when we've seen these massive surges in volume, they usually are followed by a change in direction for the asset. And so it could be, again, trying to see some of the potential clues we could be approaching a point of momentary reversal, or hopefully a more significant reversal, as these volumes have now started to soar, which indicates that there is just a lot more activity taking place, and that may actually wash off some of the weaker hands with some of the more new hands with more conviction that can essentially sit on this and hold this asset until it rides higher. So more details, lots to cover here, but we're going to have more details on the Fed meeting and on the corporate earnings that are ahead for the week in our What's Ahead section. Moving over to our analysis of gold prices, we see that gold actually has had its shining moment over the last 3 weeks, finding support and being one of the only assets in the green as markets continue to come under pressure. An interesting note on this on gold activity is that the Spider Gold Shares ETF, which is the biggest gold-backed ETF, saw the biggest inflow in terms of dollars since its listing in 2004 last week, and it received essentially $1.63 billion worth of inflows. And as we have seen, gold has essentially weathered the storm as some of these markets have come under pressure, and that has led to the gold to S&P ratio to break out from a very long-term downtrend that it has had since 2020. So that is fascinating to see, and this chart is courtesy of Crescat Capital. What we're seeing in gold, funny enough, is that while some investors were poking fun at gold for being slow during fast times, many are actually finding comfort in its stability during times like these. We've actually seen that gold has basically stayed flat during a period of time where a lot of markets have dropped, double-digit percentage points. So interesting to see the resilience of gold, and we'll continue to monitor this as the Fed and inflation continues to ebb and flow. Moving over to our DeFi analysis, we see that the DeFi index dropped a whopping 31% last week. Ethereum, on its part, was down 24% last week. The entire sector has remained under pressure, along with most markets. Now, looking at price performance since November, we're going to do here a comparison between essentially Bitcoin and the DeFi index, as well as Ethereum, so that we can take a look at some of the relative performance here. And as we can see, and we're just going to compare this as of November. As of November, we see that Bitcoin is down 41.5%, Ethereum is down 46.78%, and DeFi index is down 55.8%. This actually is, this makes a lot of sense if you visualize the three types of assets on a risk spectrum. And this further exemplifies the risk-off posture that investors have had. If you think of Bitcoin as the most established and robust asset, Ethereum being kind of the second most established one, and DeFi being the sort of furthest out in the risk curve, it makes sense that they are down percentage-wise in some of the levels that they are that we're seeing right now. Now, whether we like it or not, a large part of the fuel behind asset prices is this concept of easy money that the Fed has injected into the economy. Whether it was injected by direct stimulus checks, or whether it is access to cheap financing, like refinancing your home at near 0% rates, as the markets turn and rates trickle higher, the interest rates trickle higher, the flow of new money and the stimmy checks stop, essentially, the flow of new money to markets could be constrained. And this is, in fact, what the Fed wants to accomplish. Having said all of the above, history has taught us that there is always a reason to keep the easy money party going in terms of the government. And in democratic countries, this tends to be connected many times with electoral cycles. And we just so happen to have an election in the US in November of this year, so later on in the year. So although we have a hawkish Fed now, that is not to say that the Fed will remain hawkish come summertime as politicians get ready to set out on the campaign trail. Now, there is a side of crypto that shines brightest when most other crypto assets are in turmoil. And this type of asset is stablecoins. according to data from the block, and we're going to pop that up here. It's hard to visualize here, but if you look here where it says total, it's 150.8 billion at the beginning of basically the December of 2021. And in the last 30 days, we have essentially seen the market capitalization of stablecoins grow by a whopping $4.77 billion. This is since December 21st. And the total stablecoin supply stands at 155 billion right now. And it makes sense as investors that cash out from volatile tokens look to wait for the next opportunity while they're sitting on stablecoins earning a great rate. And you can look for this trend to continue and accelerate into 2022, both as new investors are coming in order to get some of that really great yield on stablecoins, and also influenced by the fact that investors may be selling out of some more speculative volatile assets and using stablecoins to basically stay there or park their assets there while they find the next opportunity within crypto. And moving on to our Bitcoin mining section, the mining industry continued adding to the positive momentum that's been building since the start of the year. Two well-known mining companies made headlines this week. One of them was Core Scientific. And Core Scientific is North America's largest mining or Bitcoin mining company. And in this announcement, I'm just going to put it here so it's more visible. In last week's announcement, they basically stated that they started trading on the NASDAQ under the ticket CORZ, C-O-R-Z. And this was done through an estimated $4.3 billion merger with a with essentially a SPAC corporation. And what this means is that there is now a new publicly listed U.S. miner, which is great. For reference, the Texas-based company assured that it is the largest in the U.S. in terms of processing power and has a capacity of 6.6 exahashes. This is compared to Marathon Holdings' 3.5 exahashes and Riot, which has 3.1 exahashes. So it is Core Scientific is materially larger than these other two. Another positive note: Canadian company HUD-8 announced that it had acquired 5 more data centers last week. So again, we just see continued momentum and investment in the Bitcoin mining industry. And lastly, we also wanted to share that Bitcoin's mining difficulty reached an all-time high last week, moving higher by 9.1%. And we see that we are now at all-time high territories, and this trend again is expected to continue. And a last closing note, we saw that last week the Bitcoin Mining Council's Q4 report stated that 58% of the energy consumed in the Bitcoin network worldwide comes from renewable energy. So this is contrary to the Bitcoin produces too much e-waste idea. And they also mentioned that Bitcoin has a cleaner carbon footprint than many other countries. So lovely to see so much momentum and support building behind the mining industry. And as always, we leave you with what's ahead for the week. As we mentioned, we have a very busy week ahead of us with earnings and the FOMC meeting. And we're going to get right to it and break down when those are happening and where you can what you can expect, when you can expect them. So today, Tuesday, we just had it earlier this morning, the S&P Case-Shiller National Home Price Index. And that is going to be important because the last read in December showed that house prices in the U.S. had gone up 19.1% year over year. And all signs point to a scorching hot market still. Markets and it'll be interesting to see if markets start cheering numbers that are lower and essentially signal towards tapering asset price growth because of the current kind of position that the Fed is in. So we'll be following up on that as well. Today also, the most important event this week, the US FOMC meeting starts today. They do not give a statement until tomorrow, but the meeting effectively starts today. Tomorrow, 9 a.m. Eastern, we get earnings reports from Intel and Tesla. Those might mention Bitcoin. Intel has been rumored to be working on a processor. Tesla, as we know, has been back and forth with Bitcoin and Dogecoin and other type of digital assets. 10 a.m. tomorrow, we get new home sales in the U.S. Again, similar in terms of trends for the price. They'll be looking at the velocity of price appreciation of U.S. homes, and the Fed will likely want to see this taper of some sort. At 2 p.m. tomorrow, we get the FOMC decision in writing, and at 2:30 p.m., we get a press conference from Fed Chairman Jerome Powell. This is what most people will be focused on, and very likely that come 2:30 p.m. tomorrow, markets react to whatever is said. Thursday, we have 8:30 a.m. Eastern gross domestic product in the U.S. Prediction here is for an increase of 5.8% growth in fourth quarter 2021. And Thursday, we also get earnings reports from Apple, Visa, MasterCard, and McDonald's. So those are all big names. And they could in some way mention digital assets or Bitcoin. And last on Thursday, we get pending U.S. home sales, in the U.S. Friday, we get a read on inflation data. And this one will be very interesting because it's one of the indicators that the Fed follows very closely. And that is 8:30 a.m. Friday, we get the personal consumption expenditures month-to-month change. The expectation here is for a 0.6% month-over-month increase, translating to 7.2% annualized inflation. This is in line with the headline inflation that we saw in December, and this indicator is closely followed by the Fed. So the market could react to this number as it does to the CPI data. So a number above 7.1 or 7.2 could potentially spook markets. Numbers below that could be cheered by markets as it all goes back to what that does to the Fed's feedback loop. So we covered a lot in this issue. There's a lot of activity going on the week. If you enjoyed this show, if you learned something, if you like it, I welcome you to give it a thumbs up, subscribe to our channel, share it with your friends. If you don't yet have a Ledn account, I welcome you to check out Ledn.io and learn how you can start earning the best interest rates for your Bitcoin and USDC if you want to earn interest on your assets. And we also have the best rates on dollar loans backed by your Bitcoin if you need access to financing and don't want to sell your stack. We also have our brand new Bitcoin mortgage, which lets you buy a house as big as your stack. So reach out, Ledn.io, and thank you so much for watching us yet again. See you next week.